Good morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao. With me is Varun Hiramat. Let's kick off the show by taking a look at the top headlines. It's the 11,000 mark that holds for the Nifty. You have Pharma, IT indices which are looking very, very firm. Energy, auto under pressure. Reliance as well as HDFC Twins are also slipping in trade. So you have the markets being a tad bit flattish right now, in fact as flat can be. Let's see which way does it finally pan out.
Right, Karunya, definitely could go either way right now. We don't know. Even look how volatile the US markets were last night, so that'll be interesting to note. But let's just flag off the record highs once again. Nifty and IT indexes scaling the fresh new highs, with your TCS, Infosys, HCL Tech all making fresh highs, and this is also on the back of Facebook, Apple, Amazon all reporting solid earnings beats in the US.
Okay, then you also have some important earnings to watch out for. First up is SBI. Loan growth is likely to be in the range of 7 to 8%. We're expecting a cut in lending and deposit rates as well, which could impact the NIM's trajectory. Outlook on agri and related slippages, commentary on MSME and retail, provision coverage. These will be some important factors to watch out for.
Most definitely, Karunya, and also just earnings radar today. COVID setback likely for Tata Motors, so that's going to be a key one to look out for. Revenues are seen at 28,000 crore versus 61,000 crore, so that's quite a sharp drop. Loss is seen at 7,700 versus 1,398, so that loss figure also really jumping. At the EBITDA level, also unfortunately, you're looking at a loss of 1,700 crore versus last year's positive EBITDA of 2,858. So naturally low volumes, that's expected, and then significant losses on account of JLR are also something to look out for this quarter.
Yes, meanwhile, we'll also be watching out for Sun Pharma. COVID-19 may hurt its specialty business. Overall, US sales to be down 10%. Low base may aid revenues, but we're expecting a flattish sequential growth. So these are some heavyweights to watch out for: SBI, Tata Motors and Sun Pharma.
All right, and another one to look out for this morning is also Laurus Labs, which is currently surging on the back of some really good numbers yesterday. The PAT on a YOY basis, I think, was 180 odd crores versus 15 crore. So that's really picked up, and the management spoke to ET Now this morning and declared that this 29% EBITDA margin is in fact sustainable because of investments that have been made over the past few years that now seem to be paying off. So that's the key trigger, and that counter very buoyant as far as trade today is concerned.
Right, and finally you have some import curbs trickling in for the TV segment. Color TV imports back in the restricted category. The government license is mandatory for certain importers. Definitely it augurs well for local producers like Dixon Technologies. We caught up with the management earlier in the day as well. But yes, these are the top headlines. Back to you, Varun.
Yeah, before we turn to the markets for a more comprehensive view, let's just get everyone up to speed with the COVID headlines for this morning. And beginning with the fact that COVID cases in India have now crossed the 16 lakh mark. India records the single-day highest spike of 56,000 new cases. Punjab rules free plasma treatment. And WB extends suspension of flights from 6 cities to August 15. India has pockets of localized transmission, says the Health Ministry. Assam rolls out partial unlock in August. Delhi allows weekly markets on trial basis from August. Vivo and Aculi Labs developed a contact tracing app. Young not invincible to COVID-19, says the WHO chief. And the US plans massive vaccine campaign in November.
Okay, then moving on to some market updates. You have the benchmarks still being very flat. Nifty is just holding on to that 11,100 mark. Sensex at 37,747 mark. Broader markets, well, small cap index is in the red, but very marginally so. Mid cap is up by about 0.2%. So right now, in terms of quantum of gains, it's the mid cap space that's really outperforming. From the sectoral indices, it really is the pharma index that's shining in trade. It's up more than 2% as we speak. Some names from the IT and heavy and Nifty FMCG as well, which are looking very resilient. On the flip side, you have some weakness in financial sector names and Nifty Realty. But largely, I would say it's a day that's being owned by pharma as well as by IT. You have a Torrent Pharma from the index up more than 12%, Aurobindo Pharma up 5%, Cadila is up 3%. And from the IT index, you have an HCL Technologies, Infosys, L&T Tech, all gaining in the excess of 1% each. But the mood of the market largely looks quite muted, quite subdued at this juncture. Kunal as well as Vijay Chopra are here with us on the show. Kunal, hi, morning. Do you have any observations to make on the benchmark indices? Which way do you think are they headed?
So good morning, Karnya. Good morning, Varun, to you as well. I think over the last couple of days, I had pointed out one observation. In fact, I had tweeted about it as well, that how the trading PE for Nifty has come back to historic highs, and such kind of elevated levels, and that was at 11,300 approximately, which I had flagged off slightly above those 11,300 levels. And from there on, you've seen clear struggle coming back for the indices. So I think now that becomes a key hurdle point. So you can probably add a buffer of maybe 100 points, 150 points on the Nifty, and try and look at 11,400 to 11,500 on the max upside as one of the major resistances for the indices, at least for a good part of this series. Now you look at how the global markets are panning out. There's one very interesting observation which I was looking at on the global markets, that Nasdaq and many of these stocks like Amazon, Apple, etc., they are now coming back below their 20-day moving averages. So this is an interesting chart pattern which is shaping up. So if these stocks managing to trade below the 20-day moving averages, it will eventually pull many of the other global markets as well, and including our markets. So for the Nifty, for example, the 20-day moving average is I think at 10,900 or 950 on the spot levels approximately. So what I'm trying to indicate is that over the next couple of days, if there is some pressure which gets created in the global markets, then I believe there could be more pressure which could be lined up for Nifty as well. And possibility is that we may scale back below that 11,000 mark on the Nifty over the next couple of days. So markets are clearly defining some sort of a range for this expiry. 10,900, 10,800 is where I believe going to be some very strong support zones for the indices. But 11,400 to 11,500 range, as I just indicated earlier, could be a very stiff resistance for this series.
Okay, thanks for that, Kunal. Vijay, let's also get in your take on the markets. What are you reading into it like this morning?
I guess that markets have shown a very decent resilience in the last 3 to 4 months, and we have seen markets straight away scaling from almost 75, 7600 levels on the Nifty to 11,300 almost. So I suppose that there should be a breather market should take, and it is quite visible on the screen as well that markets are struggling to go up. So I think that 200 to 300 points correction on the Nifty would make markets very healthy, and probably the price to earning can come down a bit. So I would think that India has not fared badly considering the way we have had lockdowns and companies have closed down. There have been certain sectors which have excelled, and there have been pockets of excellence. So I think that there are sectors which would support the Nifty. So I'm fairly bullish on pharma. I'm fairly bullish on consumer companies, and of course Reliance, which has almost single-handedly taken the Nifty up. And it is again, Reliance has not corrected even a bit after the results. Generally, we used to see some kind of a correction happening in Reliance post results. So I think that there are good companies, good sectors which are going to uphold the Nifty, and Nifty I.T particularly. I'm fairly bullish on the biggies like TCS, HCL, Wipro. These companies should do well. The mid caps also should do well, like Mindtree. So there are good companies which would not allow the Nifty to go down. But again, 200 to 300 points correction on the Nifty would make market very healthy, and probably we'll see a decent upside from there.
Okay, Vijay, that's great. Thanks for sharing your views. Let's get a move on with our queries. And the first one is from the line of Hormuz D. Shroff. And he's from Mumbai, and he's written to us via email. And please share your views on Cochin Shipyard is the query. So, Kunal, on the technicals first, how's the chart looking?
It's quite attractive. I think the stock was in the thick of a breakout or some sort, I think a couple of days back. It was one of the I would say buzzing mid-cap names since last 2 weeks and months. From those June lows of 220 to 15 approximately, the stock has done very well, and it's risen to almost 330 plus. So it's done pretty well. Good volume accumulation for Cochin Shipyard in the recent past. But if you're looking to enter now, then I believe wait for some sort of a decent correction, because what has happened is in this 2 months of price rally for Cochin Shipyard, it's not gone through any major correction. And the stock has a history of going through some sharp periods of uprise and then followed by some sharp periods of correction. So, for example, if you buy right now and the stock goes to maybe a 10%, 15% kind of a correction, and if it comes back to 290 kind of levels, you would probably want to deliberate that whether you want to hold the stock or not. But I think look at it from the other way around, that wait for a sizable correction. I think over the next couple of weeks, maybe there is a strong possibility that many of these mid-cap names which have not gone through any periods of correction, they could also try and fall through another 10-15% kind of a drop. So I think use that correction and try and time the entry point. I think closer to 290, 300 levels approximately could be a good entry range for you to look at Cochin Shipyard.
Vijay, what is your view on the fundamentals for Cochin Shipyard? A good idea to invest for the long haul?
Well, I guess that the stock has done pretty well from the lows of March, from almost 210 or it had started coming up, and we have seen a decent upside of about 130 rupees. So I completely agree with Kunal that let's wait for a correction, and this is what I also believe, that the market should take a breather. So once you get 20-30 rupees down, you can it is a stock to keep in the portfolio. It's a kind of a portfolio stock. And one more thing, that the government is trying to sell the PSUs, so probably Cochin Shipyard might also be one of the contenders. So I think that if somebody wants to enter 20-30 rupees down from here, and if somebody already has it in the portfolio, no worry at all. The company is very strong fundamentally, and once the economic activity picks up, so we'll see a lot of shipping activity also happening. So just hold on and hang on with the position, and if somebody wants to enter afresh, wait for a correction.
Okay, thanks for that. Then moving on to query number 2, and before we do that, it's about Tata Motors. I just want to flag off that their numbers will be out this evening as well. It is likely to be a very, very weak performance, because on a standalone level you have PV and CV sales primarily massively and significantly hit because of COVID pandemic. CV has been underperforming for quite a few quarters anyway, and this perhaps could be the bottom for the company. JLR business was very, very weak. The volumes were down more than 50% in the quarter gone by. Of course, this is an unprecedented quarter. It's a one-off thing, but it's likely to be a weak one. We would like to understand from the company what the turnaround plan will be like, because they have worked on a turnaround plan for so many years. They finally started to see green shoots, and then bam, COVID happens. Loss we're expecting to be close to 7,700 crores. We're expecting an EBITDA loss of about 1,700 crores as well. For JLR, we're expecting even the JLR business to slip back into EBITDA losses despite a partial benefit of favorable currency and despite geography mix improving. China started actually seeing some signs of revival in the quarter gone by, but US and Europe markets were completely shut down. So let's see how it plays out. Let me read out the viewer query as well then going forward. We have Riya Pathak from Jamshedpur who wants to know our experts' view on Tata Motors ahead of earnings, how one should play this up. Kunal, Tata Motors has been very, very weak even in terms of how the stock has performed in the recent past. How do you think one should one even look at it from an investment point of view or from a trading point of view at this juncture?
Well, I think I'll frankly admit, Karina, that this stock has remained a mystery to most of the technical guys as well as the fundamental guys. Because, I think in good part of 2017, 18, 19, when many of these auto stocks had, some periods of decent rally. Yes, they could have been going through some corrective phases, but then there was a period of at least 5-6 months where these stocks had a, big rally or any sort of decent rally. But Tata Motors failed to do it, even in the best of the periods or in the periods of 2017 to 2020. And come, the era post-COVID, correction, I'm talking of the month of April onwards so far, the stock has not even retraced back 50% of the fall which it had done in the first quarter of 2020. So I think in that regards, the fall from those 200 levels to sub 70, 75 when the stock had tested those levels, it's not even crossed the 50% retracement of those kind of levels. And at one point of time, you're talking of recovery in many of these other auto names. So it's clearly a signal that the stock is weak in terms of price trends. Now, when you're trying to anticipate reversals in terms of price trends for a weak stock, it's more important that it has to be backed by some sort of a news flow, some sort of an event which plays out into the stock price, because only then fresh buyers, and I'm talking of long-term, bigger hands, institutional guys, would probably try and flock into those kind of stocks. Otherwise, it would just become like more or less like a hope trade. So I think my analysis will be very simple, that wait for some sort of a trigger which pans out, whether it's result or any kind of such event which pans out for Tata Motors. Only then is where you should look to buy. In terms of levels, I think above 115, 120 range is where some sort of positivity would come back into the stock price.
Okay, we hear you, Kunal. Vijay, coming to you, so much going on with Tata Motors. There's a JLR portion to look at. There's our domestic business, of course. Fundamentally, how is this play looking to you going forward?
Well, I think that the company has undergone a major revamp in the last couple of years. Look at the models they have come up with. Look at the designing of Altroz and the new model like Harrier. Now, this is completely different from what Tata Motors used to be a few years back, because we did not see any kind of, so to say, beauty in the designing part. But I think that they have instilled that, number one. Number two, JLR probably should do well looking at the Brexit deal and looking at what is happening with the pound. Pound is strengthening. So I think that there are reasons why Tata Motors should go up from here. So of course, it won't happen in a flash, but it would take some time before we see Tata Motors going up. But yes, people can start nibbling into the stock slowly. Another point is that, as China recovers, and China happens to be one of the biggest markets for JLR, so I think that the stock price is rock bottom here, and 100 or 102 rupees, I think. And people can start nibbling into the stock, and on every correction, I think that it can be bought into. My sense is if somebody holds on with 2 to 3 years perspective, it can even double up from here. So probably the worst is over for Tata Motors.
Okay, that's heartening to know. The worst is over, according to Vijay. Kunal, let's just come back to you. I think we haven't gotten your picks for today.
So, Varun, I'll suggest a couple of buy calls, and both of them are specific towards a certain theme. The first one is a buy on Sun Pharma, and yes, I'm aware that the stock is due for a result, but I think the stock price momentum in the last 2 days, is indicating that there could be some sort of a positivity which could come across, at least on the result front, because of this stock, recovering yesterday. I think it was up 3-4% odd. and today also the stock is up more than 2.5% from carrying from yesterday's momentum. So it's a stock which is showing some good signs on the short-term chart. So I'm expecting that, assuming post-result, if it's favorable, then the stock could see an additional boost on the upside. And Nifty Pharma Index overall has been doing extremely well. We've been trying to watch that as well. So Sun Pharma is a buy. 550 is where I would place the initial set of targets, and stop loss could be kept at around 500 mark. The second would be from the JSW, from the metal pack and JSW Steel is what I would recommend as the second buy. Now it's specific towards the theme that dollar index is going through a big corrective phase. So if this correction continues for the dollar index over the next couple of days and next couple of weeks, then I believe that these metal stocks, which have been languishing quite drastically on the downside, they could try and get a fillip or a boost up on the upside. So JSW Steel is what I've picked up as a buy. Short-term targets to be kept at approximately around 230 plus mark, and stop loss at 213.
Okay, thanks for those exciting picks. Let's quickly also go over to the BNSN stock cloud for this morning, beginning with the index heavyweight, Reliance. Its numbers were out yesterday, and on many accounts it was a beat. On some accounts it was definitely a miss. So mixed set of numbers, but overall ahead of street estimates, and that counter has been under some pressure today. So that's leading our cloud this morning. Then we have a Cholamandalam Finance, which has also reported a mixed set of numbers, and we'll soon be chatting with the management here on BNSN. So much to discuss happening there with the rural uptake in tractors and vehicle finance. Then Vedanta's in there for various news surrounding capital raises pertaining to all the M&A activity which needs to happen there. HDFC Life on the back of recent numbers. You have a Torrent Pharma and Aurobindo Pharma making it in there because pharma stocks are really hot right now. Aurobindo is near a 52-week high. Then you have Lakshmi Vilas Bank back on numbers again for results. Then SL Propec we have because it's up around 15% today, and I believe they're really benefiting from a tailwind in the packaging sector. A lot of companies today seem to be fairly active on that front. Then you have a Rain Industries which just put out its results as well, so that's in there. And then you have AU Small Finance Bank, which has perhaps seen the most tremendous recovery in banking stocks. But what's interesting to note is that at the peak of the price, Warburg Pincus yesterday apparently has sold a large chunk of their holding or their entire holding in the lender. So that's why that one's in focus today, Karunya.
Right. Thanks for giving us a check of all the stocks buzzing in trade and that our viewers need to keep an eye out for. Adding to that is Sun Pharma, an important earnings candidate which is rallying ahead of its numbers. Pankaj is standing by with a detailed poll. Pankaj, tell us what to expect.
Sun Pharma will be declaring its numbers. And one of the key things to watch out definitely is that what happens to the US sales business. Taro, which is a significant part of the company, has already declared numbers and it's looking in slightly weakish, so the expectation automatically comes down. Now, when we talk about the numbers, about 8,000 crores is what the street is anticipating in terms of sales. 19% is the QOQ exact comparable for the margin, so that is expected to get maintained. And then apart from that, when you just look at what's happening in the India business, maybe because of a lower base, the Aditya Medicates issue and all the cleanup that they had a low base in last quarter as well as last year. So on a QOQ and a YOY basis is expected to be flattish, but this is versus a decline for some of the other companies. Now, Dilip Shanghvi will also be talking post their numbers, and that will be the most interesting part. Firstly, what is the trend in prescription drugs? We all know April and May was not that great as far as numbers are concerned because of the lockdown, and that's why what was the trend in India, what was the trend globally, what is the impact that is there? US sales are expected to be down 10% YOY. This is also impacted by the lockdown. It is also impacted by Q1 last year, which had a one-time opportunity. Actually, because of that, even the margins of last year are looking at 24% versus about 19%, which is expected at this time around. So when the management will be speaking, outlook on their US business, what's happening as far as trends in prescription is concerned and trends in specialty is something that the street would watch out for.
All right, Pankaj, very interesting. And Sun Pharma, now a lot of people are talking also about having breached a critical resistance of its recently. So definitely an interesting one to look out for. But let's switch gears a little bit. Poonam's going to walk us through what's happening with the tech index and all the catch-up we're playing to the NASDAQ and how these numbers are really stacking up domestically versus the FANG stocks, which just all reported their earnings last night. Over to you, Poonam.
All right, Varun, in fact, if you look at the Nifty I.T index, it has scaled fresh record highs in today's trade. For the month of July itself, this index is up 23%. TCS, Infosys, HCL Tech have hit fresh record highs. Globally, if you look at the earnings, Facebook, Amazon and Apple have reported a beat in terms of the earnings, and Idil does mention that this could mean again a positive read-through for the high-tech verticals of some of the Indian outsourcers. Besides that, if you look at from the Indian IT stocks perspective itself, Q1 of course has been better than expected. We saw Infosys and HCL Tech in fact giving a guidance while they had suspended during the last quarter. We're also seeing a strong deal pipeline, a strong demand, positive commentary coming in on demand front from all the IT companies, both tier 1 and tier 2 players, and also strong cash generation. Globally, if you look at Facebook, well, Q2 has user growth has been better than estimates. The daily active users are up 123%. Amazon posted record sales and profits. Shoppers definitely purchasing more online. They have recorded close to around $90 billion in sales itself. Apple also has reported good numbers, both in terms of iPhone, Mac, and iPad, and double-digit growth is seen both in products and services. So as such, if you look at the entire IT space, well, good demand, strong deal pipeline, strong cash generation, all these factors leading to it scaling new highs. Analysts have re-rated some of these stocks there, and this sector is definitely doing very well.
Thanks, Poonam, for that. Definitely the IT pack is doing very well for itself in trade today specifically. Moving on from IT to aviation, we have Utkarsh joining in with an update for SpiceJet's payment plan to the Airports Authority of India. Utkarsh, fill us in.
It was day after tomorrow, day before yesterday actually, sorry. It was day before yesterday that SpiceJet got a notice from Airport Authority of India, and the notice said that they will be put on cash and carry. For the next 2 days, there were discussions on about how will the operations go. We got a release from SpiceJet yesterday saying that the issue has been sorted and there will be no impact on operations. Now, what I've been told by sources in Airport Authority of India is that an amount of around 60 lakhs will be paid by SpiceJet daily to Airport Authority of India. Now, irrespective of going to each and every airport and paying that, they'll be paying all the amount, the lump sum amount in Delhi every day. Apart from that, the company will be soon submitting a plan to make sure that how to really get done with the previous payments. Over 175 crores is what they owe Airport Authority of India. So in a way, the SpiceJet might say that they're not in the cash and carry mode now. But if you look at it, it is a cash and carry some way or the other. And that also means that every day around 65 lakhs needs to go from the account of SpiceJet to Airport Authority of India to make sure that the flights are operational.
All right, on that note, let's slip into a quick break here on Buy Now, Sell Now, and we have the management of Cholamandalam when we come back. All right, welcome back to Buy Now, Sell Now. We're now joined by a very special management. We have Mr. Arul 7D, who's the Executive Vice President and CFO at Cholamandalam Investment and Finance Company. Thanks for taking out the time to chat with us this morning, sir. It's great to have you on the show. If I may begin with saying that Q1's had a lot of forces moving the results. On the one hand, you have the yields declining in the vehicle segment. You also have massive uptick in tractor dispersals. At the same time, your cost of funds has come down and your operating expenses have come down. So could you tell us, which force is really driving the result right now, and what your take on the Q1 numbers is?
Yes, compared to last year, we had done well, in spite of the constraints with regard to the lockdown, which literally took away more than 1.5 months of disbursements as well as our operations. However, we had been able to bounce back to a large extent, progressively from May as well as in June. And this has helped us to do disbursements. Our spread in the rural area helped us to do more disbursements, especially in tractors and two-wheelers, and also to some extent on the construction equipment, which helped us to pick up disbursements quickly. And our customer profile is such that they are now able to operate nearly around 50 to 60% of their capacity, which is a good sign considering that they were completely locked out in the months of April and partially in May. So this has also helped us to collect some amount of collections have been better, and we have been able to address the overdues, etc. of the past book. And this has also helped keep the loan losses low. Our OPEX is low. Cost of funds have been good. We have reduced our cost of funds, thereby enabling that this current quarter we could turn out a good profit for this quarter.
Hi, sir. Could you also give us a sense of how the trend is panning out for vehicle yields? Is it going to be, or is it likely to be low even going forward?
No, the vehicle yields will progressively increase. See, the two things. One is the yield per se, which is coming because of the mix. We are doing more and more of high-yield products, which is like tractors and two-wheelers, etc. And the rundown of the old book, which is our heavy commercial vehicle book, which has been a low-yield book. The second factor is the cost of funds coming to the rescue, which is now the money market is opening up, and we are able to place NCDs at competitive rates. And even the bank funding, which we had relied on over the last few years, has enabled a reduction because the MCLRs have come down and we could reprice these loans with the current MCLRs. This is also helping us in reducing the cost of funds and improving our NIMs. So both these put together should give us a good traction in the coming months on the yield front and the NIM front.
Right, sir. And, one more question on the tractor disbursements, because we're also looking at rural recovery closely. Now, they've been up 2.5x sequentially, and even on a year-on-year basis, they're up 73%, excuse me. So, is this healthy pickup part of the pent-up demand post the lockdown, or are these figures robust and they should carry forward into the rest of this year?
See, the tractor is a seasonal product. What has happened is we had been doing this product over a few years. We are, as in any other product, we had been testing this over the years, and we have been progressively increasing the share. We have been tying up as a preferred financial with many of the tractor manufacturers, and we had also got a breakthrough recently with one of the large manufacturers. This has also helped us to scale up the volume. However, the tractor volume will come down in the next 1 or 2 months because season will be down. But because monsoons are good, we expect this to again come back when the normal season picks up.
Okay, all right. Mr. Arulselvan, I also wanted to understand what is the outlook going forward as far as your costs of funding is concerned. How do you see that shaping up? Will it be low? What is the margin profile likely to look like for the rest of the year, if you could shed some light?
So the cost of funds, as the trend right now is indicating, yes, it will certainly be lower. We expect over the year at least a 40 to 50 basis point savings on the cost of funds side. However, as you know, the market is volatile. We need to keep a close watch, and if things pan out correctly, I think that amount of saving on the cost of funds can be taken.
All right. Thank you so much, sir, for taking time out, for chatting with us about the trends that are shaping up for your company and the performance that one should expect going forward. Cholamandalam Investment and Finance right now trading weak, I would say, after the numbers, 3% down. The stock has seen a very mild recovery in the last half hour or so. Okay, moving right on from one mid-cap company to another, but this one is flying in trade. Earlier in the day, we spoke to Satyanarayan Chava of Laurus Labs, where he talked about India's increased interest towards API manufacturing. Let's listen in.
Changing a starting material, changing an intermediate, changing an API has a different timelines. Starting material may take 6 months, intermediate may take 12 months, API may take anywhere between 18 to 24 months. For the sake of clarity, we don't buy any intermediates from China, we only buy starting materials. So we don't see any threat because of the change of intermediates or APIs. All our formulations are fully integrated. We make on APIs what we formulate. So imports of APIs or less imports of API has little or no bearing on our future.
Okay, let's also just get you a quick 60-second preview of what to expect from SBI's numbers, which will be out. Couple things just to simplify it for you. Margin will be in focus this quarter because SBI has also cut its MCLR rate as well as its deposit rate. So the NIM trajectory might change. Analyst estimates were ranging anywhere from 2.7 to 3.1. NII should hold up fine, growing at around 10-15% at 24,500. Operating profits are expected to decline by around 2 to 3,000 crores to 15,400 sequentially. And the provisions obviously we'll be looking out for, and some commentary on MSME as well as the agri book from SBI are key features for this quarter.
Okay, let's move right on and get you another important and interesting package as well. But I think we've lined it up after the break. Amazon Prime, some insights coming on what's in store for you to watch on Prime exclusively, coming right up after this break.